on the session today?
James, we saw a fresh 5-year high, although it didn't really feel like it, and that's because it was very similar to a risk-off session. We saw that with the large cap stocks outperforming some of the smaller as well as the mid-cap stocks. In fact, if we have a look at the blue chips, the top 20 index, that was up by 0.2%, outperforming the general benchmark ASX 200 index, which was up by 0.1%, and of course the mid-cap underperforming with a loss of 0.5%. So it does look like investors were being a little bit careful going into this US Central Bank FOMC meeting, and in terms of sectors we saw that as well. The best performing areas were some of the high yielding and defensive areas like the utility sector, the telecom sector, as well as the financial sector. In fact, the financial sector in particular doing quite well. We saw NAB, Suncorp Metway, as well as Macquarie Group reaching a 52-week high, and looking around the market we also saw some all-time record highs. One was TPG Telecommunications after coming out with full-year numbers, and the other was Crown. So altogether, pretty good day on the market, but light volumes, and it was very much a typical risk-off day, even though we saw a rise for the market.
A lot more is going to be known by the end of the week. You made reference to it as well. Obviously, expected tapering announcement by the FOMC Wednesday evening. What do you think the wash-up is going to be?
This is going to be the central, most important event for markets, I think, in probably 2013. So having a look at tapering and expectations, there's three possible real scenarios here. First of all is the possibility of no taper, and that would be seen as a positive for risk assets. So positive for things like the markets, for gold, as well as for the Aussie dollar. The second scenario is probably the most likely scenario, and the one that's being priced in my markets, and that is a small tapering. That is $10 to $15 billion of the $85 billion which is being pumped in every month at the moment. So if we have a look at that scenario, that's probably being priced into the market. So that would probably have a neutral to a mildly positive impact in terms of the market. And then the third scenario is probably the least likely, and that's a large tapering, and that's probably a size of between $20 to $25 billion. And if we see that, we're probably going to see a risk-off environment, so that would be a negative for stocks. That would see things like gold also being sold off very heavily, and the Aussie dollar being sold off heavily. So they're the type of reactions that we're anticipating tomorrow, and the three most likely scenarios playing out. Investment banks, very different in what they see as being the most likely scenario. If we have a look at Bank of America, Merrill Lynch, they see the no tapering as their base case scenario. We see Credit Suisse, they see $10 billion off both the MBS as well as the Treasury market, so a $20 billion, a large tapering being their most favourite scenario.
Michael, of the three scenarios, which one do you want with the minutes out from their last board meeting? Did we see much of a reaction on markets?
Well, if we have a look at the RBA minutes, still pointing to the possibility of another rate cut. If we have a look at the reaction in terms of the Aussie dollar, this is how the Aussie dollar traded intraday. So you can see that once we did see the RBA minutes come out, we did see a little bit of weakness in terms of the Aussie dollar, probably pricing in a greater possibility that we are going to see a rate cut. So the RBA minutes for September, if we remember that particular meeting, no one was really expecting to see any move, and that was because of the election being held. But having a look, they are still pricing in the possibility of another rate cut, and the Aussie dollar moving downwards on that possibility.